Hey everyone, I'm Veronica Wasek with 5 Minute Bookkeeping, and I am in the middle of a series of showing you how I review and diagnose my clients' books, whether I'm looking to price a cleanup or doing the books on a monthly basis and reviewing the books. And previously, I showed you the profit and loss report and how I review the income accounts. So I'm going to continue with the profit and loss report and now reviewing cost of goods sold. So let's go ahead and get started. Okay, so I am in the profit and loss report for the year 2021, which is the year we're reviewing for our sample company. And so we have the profit and loss, the income accounts, and then we'll go here to cost of goods sold. And for the full year, we see that they have a cost of goods sold of $8.75. Now, cost of goods sold is one of those accounts that gets people confused as to what is cost of goods sold. Should you have cost of goods sold? Even is cost of sales the same thing as cost of goods sold? So let me talk about that first. So generally speaking, cost of goods sold or cost of sales, you'll hear those terms interchangeably, are the costs that you incur in providing products or services to customers or clients. For a product-based company, it's generally fairly simple to tell what should be cost of goods sold because generally speaking, the cost of their products is their cost of goods sold. There are other costs that you might track under that, under cost of goods or COGS, as some people call it. Shipping is one of those costs that you generally see. And some other costs as long as they are incurred in selling those products. Now, for a company that sells services, you sometimes will see that companies don't track cost of sales at all. And now we would call it cost of sales when you sell services because you're not selling goods, so we call it cost of sales. And sometimes you see companies that don't track cost of sales when they provide services. And I think it is one of those things that perhaps in their industry, they may not do that. For example, we work with veterinary practices and they don't track cost of sales, at least the clients that we work with. So maybe that they don't track cost of sales, but if they do, which it can be okay to track some costs in cost of sales, what you would generally see might be some employee expenses, independent contractor expenses, and other expenses incurred in delivering services to clients. And when we're looking at this company again, we're seeing $8.75, which seems really low. I mean, if anything, you wouldn't track cost of sales or cost of goods if it's that low. So first we have to look at the type of company that we are working with to see whether they should be tracking cost of goods. And I'll just go ahead and call it cost of goods, whether it's cost of goods or cost of sales. So we have Modern Global. In Modern Global, as we can see, the bulk of their services is some sort of consulting income. They provide also design services. Looks like they may have some sort of billable job materials, which would lead me to think perhaps they should be tracking cost of goods sold. And then there's some labor. So it looks like they also do some sort of installations and some maintenance and repairs. So let's go ahead then, after looking at this, which it looks like we may need to track some cost of goods sold. Let's look at the expenses and to see what kind of expenses they have and whether any of those might be cost of goods. So we have advertising, auto, let's see, delivery, dues and subscriptions, insurance. But see here where we have job expenses and specifically job materials. So we have deck and patio materials, fountains, plants and sod, sprinklers, drip systems, even some permits and subcontractors. So all of this is part of their job expenses. I would probably have a conversation with the client to determine the nature of these expenses and make a proper determination whether these should be recategorized to cost of goods sold. So these would be probably something that would fall under my radar, and I would check with the client and assess it and make a proper decision after I talk to them. Then we have meals and entertainment, office supplies, payroll. Based on what my conversation with the client, we may pull out some of the payroll expense and putting in cost of goods. And let's see, we've got some professional fees, repairs, let's see, security, tools and miscellaneous equipment might be another account that may need to be reconciled. So again, as I said, I'll have to talk to the client about that. And we have travel, utilities, and other. So to summarize, when do you record cost of goods? First, you need to look at the type of company and industry that you're working with, whether they should have cost of goods sold or cost of sales recorded. Second, I'm going to review their profit and loss report, look at all of the account categories that they are using, and then determine whether some of those might be expenses that may need to get recategorized. And once I make that determination after reviewing that and talking with the client and making a proper assessment, then expenses will likely then be recategorized as cost of goods sold. And I may do that in a couple of ways. I will add I may add the accounts under cost of goods and then recategorize those expenses to cost of goods sold, or I may also determine that I will just change the account type from expenses to cost of goods. Okay, so that concludes my review of the cost of goods sold account and the profit and loss report. I hope that you found that helpful. If these videos are helping you, then make sure that you like, comment, share, and subscribe to this channel so you can get all of my latest videos. I'm Veronica Wasek with 5 Minute Bookkeeping.